Okay, guys, so I would love to pick up from where we left off in the last video. If you did not see the previous video, you will find it in the end screen. And what we had for last week was that we had a really strong supply zone on this daily time frame. And I'll go ahead and highlight that. Really strong supply. And what I was looking forward to was continuing to respect this supply zone. Gonna go ahead and mark that. I love my charts to be really visual. So I was looking forward to price respecting the supply zone and targeting the lows that we had here, as well as going down, filling in a lot of that imbalance. And we were going to possibly continue up thereafter. But something happened on Friday. And as you can see from this daily candle right here, this is Friday's candle, we actually went up and took out that supply zone. And when I say we took out the supply zone, it means that we grabbed the liquidity from the top of the supply zone. If people are comfortable in that area and they're looking to sell, there's more than likely a ton of stop losses right up here. And Friday's candle simply came up and grabbed a lot of that liquidity, if not all, if people still had their stop losses right above there. So how could we have been prepared for this bullish candle on Friday, even though we had uh bearish bias? So guys, something stood out to me as we were going into the middle of the week. Here's Tuesday here, which is more like the beginning of the week. Tuesday, something started to stand out to me. This is Tuesday, this is Wednesday. So the sell, the bearish bias was going really well. I was looking for us to go ahead and wipe out this liquidity here. Was looking for us to go ahead and wipe that out. And we did. But when we came to that Wednesday candle, I noticed that price was kind of standing still in a particular area. Not only did we have supply, but we also had demand. So we have to learn how to keep our eyes open as to what's happening, where candles are rejecting from. So we have that supply zone, we have that demand zone. But if we go to the 4-hour time frame, take a look at that. If we go to that 4-hour time frame, we can see it much clearer. That price came from this, and we'll extend this out just a little bit more. Here's that demand zone. There's an initial visit to this area here, and then price went up, right? We came back down to this zone. At that point, it became demand. We came back up to the supply zone. We came here. We did not make it back down to the supply zone, but instead liquidity was created. We reached back up to the supply zone. So after reaching back up to the supply zone, naturally, guys, that low would have been a target for us to definitely target. And price would have gone back into that demand zone again. So even though we had a bearish bias, guys, that demand zone stood out to me as I stated around Tuesday, and I was like, okay, something is happening here, and I think I may have to change my bias, which it's not horrible to change your bias. You have to 100% learn how to be flexible when it comes to trading, because the goal is to be on the right side of the market more times than the wrong side of the market, where we don't have to predict, we don't have to be scientists, we don't have to be more than what we need to be. We just want to be on the right side of the market because it helps our trading accounts and we make some money, right? So Tuesday, I started to realize that we were definitely in a demand, but I noticed that we took out liquidity from here. Here's where we swipe liquidity, guys. I started to say, hey, if we were able to take out that liquidity, those previous lows that the market had left behind, then I'd definitely want to target that supply zone. And this is where I started to say, hey, I think that I'm gonna have to change my bias and go and target the top of that supply zone, which is right here. Here's the top of that supply zone right there, right? Now, is it a risky setup? Not so much, because this is going to happen, guys. You're either going to be right or you're going to be wrong for your trade. How could you have entered this trade if it were me? What would I have been looking for? What would have been my confirmations for entering this setup? Guys, it wasn't the best setup, but I did find that on a 2-hour time frame. We had left behind an area. Now, this is the thing, right? Some people find that the 1 hour time frame is good for their entries. Some people find that the 15-minute, the 5-minute, maybe even the 1 minute. So just being realistic on this 1 hour time frame, this is a high that we broke right here. This is that break of structure. This is the candle that broke structure. I was looking forward to price coming back down to this area here, meaning after breaking that high, I wanted price to reach back down into this area. It could have been a really fast, wonderful trade. However, it did not happen that way. I did notice that on the 2 hour time frame, price was not going to come back to that area. Instead, it created a new high, which is here's this new high from that candle, and it created a higher low, right? Here's the new high. We broke that structure, and then price came back down right to this area here. And this could have been the entry, right? Here's that new low. This is the last push down before the push up. Here's the candle that broke that high, which closed above that wick, which was this high as well. And then price came back down right here. Even if you wanted to go ahead and use this candle right here, this could have been a candle closure above this high, and price came back down. You could have left your stop loss right beneath this low. This would have been comfortable enough for me, and you could have targeted that high. And let's see what that would have gave us if we were to do something like this with the stop loss beneath this low, and if we were targeting that supply zone right here, that still would have gave us a 6.25 to 1, which is great. And then you could have exited. Now that was the setup, and that's why it's really important to be able to understand what the candles are showing you. And as we go into the new week, some of you are maybe looking at the screen puzzled right now, and you're probably asking me why price did not come back to this area, even though there was imbalance left, even though this was the perfect entry. The simple answer is that we are not always going to get the perfect entry. Sometimes we have to work a little bit harder for our entries. However, as we go into the new week, has my bias changed? Am I still looking for price to come down into this area here? I'll show you that on the monthly time frame, what my longer term idea is. But for now, if you're looking to get prepared for the new week, we just now created a new high. We have a higher high. As I stated before previously, we took out January 2022's high. I'll show you that on the monthly time frame as well. January 2022's high is out. We have created a new high, the higher high of the previous 2 years. 2024, if we're looking at the S&P, if we're looking at NASDAQ, if we're looking at US30, we have created a new high in the past 2 years. This is the highest high in the past 2 years. That's wonderful. That's amazing. Really, really good. But what happens when we create a higher high, guys? We have to expect a higher low to happen. So if we're looking for a shorter term setup, guys, this is the high. We have a higher high. We are looking for a higher low. I'm going to go ahead and say that we broke this structure. This is an area that I'd be looking for the market to pull back into before continuing up for a shorter term setup, meaning that in the short term, I'm looking for price to come back down into this area. Now, to answer your question, if we go back to that 1 hour time frame for that perfect setup, when people are probably asking, well, I was waiting for that setup. Some of you probably were waiting for the setup. What I'm going to do is I'm going to just outline this green, and I'm going to clear it out just so that we can find that 1 hour OB. Here we are. Some of you were waiting for price. You were patiently waiting for price to come back to this area. This was a really perfect, ideal setup for you. And you were waiting for price to come back because it made sense. We broke this high here. This is the candle that broke the high. This is the OB. You were waiting for price to come back to it. Now, just because price does not come back to that area when you want it to, it doesn't mean that it's not coming. Some people are still waiting for that setup to happen. Now, here's that daily OB and here's that 1 hour OB. It is very likely that if we're looking for price to go back into discount, right? We're looking for price to go back into discount. We're looking for that higher low to happen because we have a higher high. It is very likely that this is still an open possibility for price to come back down into this area. Now, before you get real excited about that, some of you are probably looking to sell the market down for the higher low, right? that is okay as long as you have the understanding that it is a higher low and not a lower low, right? This means that if we are looking for selling opportunities, guys, first we have to allow the swing high to happen. Right now we have a swing low. We have the last push down before the market started to accumulate, but we do not have a swing high as of yet. In order for us to have a swing high, we need to see some type of distribution happening at the top of that swing high. So we don't know if that's going to be way up here before we get a swing high, but all I know is that when we do get a swing high, there are several ways that we can sell the market down to comfortably. Either we're going to sell the market down into 50% of the swing high and the swing low, which will bring us back down into discount. Either we're going to sell it down to the breakup structure, or we're going to sell it down to the daily OB, or maybe even that 1 hour OB that we were patiently waiting for last week, guys. There's several different ways to tackle this market, or you guys can set some type of limit so that when price comes down, you can be tagged in, right? There's ways. If you want to work harder, you're going to go in and you're going to look for your opportunities every single day. But if you want to work smarter, guys, you're going to simply allow price to move and then you're going to move with it rather than trying to predict the very next move. So these are my projections for next week, and I would love to show you my bigger projections. And those are on that higher time frame. So I'm going to go ahead and clear this chart. I'm going to give you some time to take a screenshot of this. You guys can take a little screenshot of this. And remember, this is a short-term analysis. I have a bigger analysis on that monthly time frame. Okay, guys, so what I'm going to do is now clear this chart. And I want to head over to that monthly chart. So here is the high of 2 years ago, 2022's high. You guys can mark that in if you want to. 2022's high. Okay, so 2024 has completely wiped out 2022's high. And again, we created a higher high. And what's really interesting on this monthly time frame is that there was a range, right? And if you're not familiar with that, I love looking at the ranges on the daily, the weekly, and the monthly time frame. This normally happens, let's just say in the event that the market is bullish, we normally open where the previous candle closed. We normally get a pullback down into discount, down into breaker structure, down into 50% of imbalance, down into an OB, or to simply manipulate people before we continue in the actual trend. And it's so pleasing to watch that we opened where the previous candle closed. We got that pullback, and then the market continued up again. And this is the monthly time frame. You're not going to be able to see this on that 5-minute time frame. Well, you would see a little bit of bullishness. So on the longer term, I am looking for a longer term higher low back down into this area before the market continues up. So that's longer term, right? This means that if you're looking for an opportunity for next week, you should not follow that monthly objective because it's longer term, as I stated. This is that monthly last push down before the push up. We don't have a swing high yet on that monthly time frame, just like we don't have one on the daily time frame. But this is pretty much my longer term idea. And what that looks like on that daily time frame is that we'd be going down much lower than we would on that daily time frame. So all of this would technically be internal liquidity. So guys, thank you for watching. Here's some of my tips and tricks. Go ahead and see if you can find those ranges on the daily, the weekly, and the monthly time frame. And remember, if you missed the previous video, here the video is for you guys to watch, like, and subscribe for more. Catch you next video, guys.